Hey everyone. We wanted to give you a quick economic update as we head towards the end of the year. And you can read our full commentary at the link in the description below. In the second quarter this year, U.S. economic growth reached 4.2% and is estimated to hit 4.1% for the third quarter. Net exports in particular supported GDP as U.S. businesses accelerated export shipments to get ahead of the tariffs from China. For the most part, employment in the U.S. continues to shine. The number of people receiving unemployment claims is the lowest it's been in 45 years, though wage growth, curiously, continues to lag. Meanwhile, consumer confidence reached an 18-year high in September, and household net worth rose by more than 8% in the second quarter. While you probably noticed that U.S. stocks rose in the third quarter, all other major asset classes struggled as investors worried about trade tensions, geopolitics, rising U.S. interest rates, and spiking oil prices. As the Federal Reserve unwinds its balance sheet and raises rates, bond markets have suffered for most of this year. When we look at the big picture, the good data seems to outweigh the bad, which might suggest U.S. stocks should head higher in any kind of a normal environment. And yet we've finally seen a spike in volatility. The interest rate story has remained a common thread woven through most of the severe and sudden spikes in volatility for the last few years. Despite mostly positive economic fundamentals, markets tend to pay more attention to the timing and tone of Fed speeches, regardless of what's to come. Broadly diversified portfolios are built not just for single-day blips, but for weathering the worst kinds of downturns. That means that no matter what people think they see in the crystal ball, those with well-diversified and risk-appropriate portfolios should do nothing. Remember that the most elite economists all look at the exact same data and tell completely contradictory stories about the future of the economy. As advisors, we'll continue to keep an eye on the Fed and all else that goes on in the world, especially amid current volatility. As we've said many times before, long-term investment success comes down to weathering storms rather than becoming part of the debris. In the meantime, have a fantastic end to your year.